you can get your coins off the exchanges. You got to get your coins off the exchange. You got to take self-custody, and you got to do what this was designed to do, which is you own a piece of a money that is equity based and not credit based. When it's credit based, the whole thing is a Ponzi. It really is. It is a Ponzi. What I'm jumping up and down about right now is that idea, which is they're trying to suck demand out of the system. But if they're breaking supply just as fast and just as hard, I don't think they can get prices under control. And I think that's the thing nobody's talking about right now. Absolutely nobody. Your typical person, I think, is walking around saying, man, what's happening with the world? It's so weird. What is going on? Like, they know something's up. They just don't understand what's causing it. And I don't think they have an appreciation for how bad it really is. This was like the basis for why I became so hardcore into Bitcoin, is because I'm saying the money is so broke.
Hello and welcome to the premiere episode of the CoinBeast podcast. My name is Luke and I'll be your host for today's interview. And we thought we would kick this podcast off with a bang and bring you an episode that we recently recorded with the one and the only Preston Pysh. We talked about everything going on in the macroeconomic situation. We talked about Bitcoin. We talked about how to make money in the digital age. And we talked about how the end game for our current financial system will unfold. So for anyone who doesn't know who Preston is, his proof of work really does speak for itself. He has nearly 500,000 followers on Twitter, and he has built one of the most successful finance and investing podcasts in the space. It is the Investors Podcast Network, and that recently ticked over 100 million downloads. So a massive thank you for everything Preston does, and a massive thank you for Preston for being so gracious with his time today. We actually recorded for well over an hour and a half, so I thought I would split that interview with Preston into two different parts. You're actually about to listen to part 2 of my conversation with Preston, and that will be the premiere episode for the CoinBeast podcast. Part 1 is actually posted over on my personal YouTube channel. That is over on the Bitcoin Made Simple YouTube channel. I'll flash a screenshot of that up on screen right now, and the link to part 1 will be in the description of today's video. So make sure you stop what you're doing now. If you haven't seen part 1, go and watch part 1 and come back here and watch part 2. And of course, a little bit of housekeeping. For anyone who doesn't know about CoinBeast or what we do, we are a Bitcoin-only educational company. It was founded a couple of years ago by two hardcore Canadian Bitcoiners by the name of John and Justin. I was lucky enough to join the team about 12 months ago, and we thought now would be the perfect time to kind of expand our horizon and educate more and more people about Bitcoin. So we've just rolled out a YouTube channel, a podcast, and we're going to be pushing out more and more Bitcoin-only educational content to prepare all the plebs for the next coming bull market and ensure that nobody has Bitcoin on exchanges when the next bank runs begin. So we've only really been active on Twitter over the past 24 months, but as you can see, we have a number of educational blogs on our website. We also host a weekly Twitter Spaces discussion where we interview a Bitcoiner in the Bitcoin space. We also have a service called CoinBeast Connect, and that obviously helps you connect yourself with a Bitcoin pro over a video call. And if you're having any sorts of issues, whether that be setting up a Bitcoin mining operation, or whether that be just simply running a node, or if you are having troubles or you're a little bit scared taking Bitcoin off an exchange, we have a Bitcoin pro who we can connect you with, who will sit down with you for an hour over a video call and help you with any sort of issues that you are having. So that is CoinBeast Connect. They're the services that we provide. So at CoinBeast, we really are hyper focused on Bitcoin only education. So now we're going to roll out interviews with a number of very prominent Bitcoiners in the space. We have upcoming interviews with CK Snarks from Bitcoin Magazine and Jeff Booth, the author of the phenomenal Bitcoin book, The Price of Tomorrow. So if any of that sounds interesting, make sure you like this video and subscribe to the channel so you're notified when those interviews drop. And that's enough about us. Let's get straight into this interview with Preston Pysh. We really hope you guys enjoy it, and I'll talk to you guys on the other side. So I think that gives us a really good point to kind of talk about the next kind of topic I wanted to bounce off you, Preston, and that is the Fed raising interest rates. They're telling us that they have inflation under control. They're going to be able to raise interest rates, and they're telling us the system's fine. We shouldn't need to worry about it. But if you look all around the world's becoming starved of US dollars. So the Bank of England's having to actually print money with inflation above 10%. You've got the European Union melt down into absolute chaos. The Japanese yen is at like a 25-year low measured against the dollar. Around the world, we're watching carnage, and the Fed and, you know, Janet Yellen and Jerome Powell's telling us it's all good. How are you seeing the big picture? Because I'm not so sure that the Fed can raise rates for the next 12 months without seriously breaking something.
Yeah, I'm kind of surprised at how well the market has endured the rate hikes so far and how long they've been hiking and the magnitude of the hikes. I never thought that they could get this far without, really creating a lot of impairment in the credit markets. So, if I had to go back and kind of give myself a report card on my analysis like 6 months to a year ago and what I was saying, I would give myself a pretty low score.
Low, Preston, in
Yeah,
2020,
low.
in 2021, inflation was 7%.
Yeah,
This was before the bond market started aggressively selling off, and there
yeah.
was two people in the macroeconomic crowd that was screaming about bonds and how they were absolute shitcoins. I think you
No,
were the second loudest person screaming about this spread between inflation
but
and you go.
I was, but where I think I was things where I was wrong was I was like, there's no way they'll make, they were talking about hiking. They hadn't even
Oh
hiked
yeah.
yet. Right? That's what I was really screaming about. It's like,
Mm.
hello, wake up. Like, look at this spread. They've literally done nothing. And they're saying they're going to tighten the balance sheet. And so long story short, they start doing hikes. They start saying they're going to do 75 bips and like all this kind of stuff. And I was like, all right, so they can do like 3 of these or 4 of these, and then this thing's going to fall apart. There's no way they're going to be able to go more than that. And they really have. They've been able to go way longer than I had ever thought. And here we are kind of like coming up on Christmas. And I mean, there's still, it looks like the next one's going to be 75 bips, 50 or 75. And I mean, inflation is just hanging in there. I mean, this is so sticky. And you got to think, going back to like my previous comment, when you start breaking supply chains, and there's not a lot of other companies to basically replace the ones that have gone bust or that have already been consolidated into other equity parent companies, right? Like, where else are you going to get the part? Like, it's not coming from anywhere else. So like, when you go from having 10 companies that you can resource parts from down to 5, down to 3, then to 2, like the jump from 3 to 2 is a massive reduction in optionality to resource your parts from. Excuse me. So when you're looking at that and you're saying like, what's that impact? Why is inflation so sticky? I would argue that's why it's so sticky, is because you've had so much consolidation across every enterprise, that it's really difficult for them to shake this out. Now, when you go over to Europe and you're looking at how high the inflation is there and how much stickier I think it's going to be there, and you've got the fact that they can't resource their energy independence, I don't know that they can get it under control. I really don't. Come summer, like, I don't know that they've got it under control, and they can do as much, tightening as they want with the central banks and trying to snuff out, basically send us into a recession through demand, like pulling back the demand by removing the units, the fiat units out of the system. But if the supply is breaking just as fast as the demand, I don't think you can get prices under control. And this is the thing I'd say right now, similar to a year ago when I was jumping up and down about the spread and them not raising rates. Like, what in the world are you doing? What I'm jumping up and down about right now is that idea, which is they're trying to suck demand out of the system. But if they're breaking supply just as fast and just as hard, I don't think they can get prices under control. And I think that's the thing nobody's talking about right now. Absolutely nobody.
I couldn't agree more. You raised so many good points. Europe, for example, they're in all sorts of trouble. Like, they've literally gone out there and shot themselves in the foot over the past 2 or 3 years, transitioning away from reliable forms of energy like fossil fuel and towards wind and solar and just
Yeah.
unreliable forms of energy. You mentioned recessions there. A lot of people are just saying this is another garden variety recession that we're either already in or we're transitioning towards. I mean, the US has already seen 2 negative quarters of GDP growth this year, but the central planners tell us that's not a recession. They changed the definition of that one. But so I'm kind of looking at the timing of these recessions, and I've heard you kind of talk about an ESG heart monitor before, and you kind of explaining how the recessions that we're running into are getting closer and closer together. Like obviously we had the 2019-2020 repo crisis that turned into the 2020 COVID recession, and we look as if we're in another one today, only 2 years later. Is that telling you anything about the health systematically of the entire financial system?
I think the health, I mean, is just way worse than people realize. Your typical person, I think, is walking around saying, man, what's happening with the world? It's so weird. Like what is going on? Like they know something's up. They just don't understand what's causing it. And I don't think they have an appreciation for how bad it really is. And I'm not trying to be a doomsday person. I'm actually very optimistic that Bitcoin can offer an enormous amount of hope for the world in all of this. But when I'm looking at like, are we going to go through another downturn that is similar to like what we saw in 2008? They're going to come to the rescue. They're going to swoop in. They're going to print a bunch of money. It's going to reflate things and everything's going to be hunky dory again. I don't think that's what's happening here. I think this is very different than anything anybody's seen in our lifetimes. What's playing out right now. If I was going to give you some charts and things to kind of look at, like the 30-year minus the 3-month, when you look at this chart and you look at when it goes negative, historically, once it's gone negative, about 2 years after it's gone negative, you see the stock market hit a bottom. Okay. And the stock market just starts its sell-off after the 30-year minus the 3-month goes negative. So recently you've had this happen where the 30-year minus the 3-month has gone negative. It's gone very negative. Like today it's at 0.64, negative 0.64. And the last time we saw it that negative was in the year 2000. And so you didn't, from a stock market standpoint, you didn't have a stock market bottom for basically 2 years after that. In September, October of 2002 is when you had the stock market bottom. So this is a little bit different. The stock market has already started selling off. I would say it's been selling off for a year already. And, this 30-year minus the 3-month was at a positive 2%, which is nearly, I don't know, 170, no, more than that, 270 basis point difference from where we are right now. So I guess what I'm getting at with all that, I know that sounds like a bunch of gobbledygook to people that are non-financial people, but this is the way I'd summarize it. According to this metric that has served us really well for the last 40 years of these negative spreads on like what to expect in equity markets and risk on assets, is that we should expect 2 years of pain in equity markets moving forward. From this point right now forward, for the next 2 years, we should expect pain. I don't think that's necessarily what we're going to see. I think you might get a year of it or another 9 months of it. I think that's in the cards. But I think once these central bank, like they're going to break something so bad. And I think you're seeing it with Credit Suisse right now. Like Credit Suisse is looking ugly, like really ugly. The contagion that could pop out of that bank alone. I think a lot of people would categorize Credit Suisse as being too big to fail. And so the amount of contagion that can pop out of that is, way more likely than people realize. I'm not saying it's a sure thing, but I will say it's way more likely than I think your typical person would realize. And so the way fractional reserve banking works, you're well familiar with this, right? As that credit impairment, which makes up an enormous amount of the fiat units in the system, starts to collapse and starts to break down, like what happens next is everything has to sell off because of all the counterparty risk that's associated with that impairment and that credit. And so the stock market has to sell off. Treasuries are selling off. Everything's selling off. And then everybody knows that the central banks have to come in and they have to reflate this.
Yeah.
They have to add more units back into the system to try to get it back to normalize where the market was before. The problem is, as they do this, they continue this consolidation of enterprise issue that I keep talking about that is disrupting and destroying supply chains, which is disrupting and destroying the cost of capital, which is disrupting the price of everything, right? And so if I was going to pull out a crystal ball on like how I see the coming year playing out, I think you're going to have a too big to fail bank break. You're going to have contagion in the market within 12 months of right now. When that happens, they're going to have to step in. They're saying they're going to do it surgically, but as they try to do this surgically, more things are going to break. It's like putting, your fingers into a dam, like that's bursting. Like you're not going to stop the flood that's coming. So they're eventually going to have to just flood the market with freshly printed fiat. And they're going to do it via UBI and they're going to do it via QE. The more they do of UBI, the more they're going to have to do with QE because it's going to lead to this yield curve control, which is basically unlimited QE that they're pegging the yields at, which is just like an ungodly flood of fiat printing. Okay. Go ahead. I'm sorry.
No, sorry. I was just going to say I couldn't agree more. That's pretty much how I see it all unfolding. It's inevitably more currency debasement. That's what the system needs.
And so for the equity market, so like going back to like historically, the equity market will sell off for another 2 years after you start getting these negative spreads between the 30-year and the 3-month. But what I think you're going to see that's different on this is I think the equity markets, because they're scarce, the ones that are profitable, I think this is a really important point. Equity that actually has free cash flows, that's not being debased with more issuance of more stock. The ones that aren't issuing more stock and that actually have free cash flows, they're going to bid because there's more monetary units in the system. If we're playing a game of Monopoly and somebody comes up and throws and increases the money supply by 400%, I'm sorry, the prices of the fixed scarce equity that actually has free cash flows kicking off of them, the value is going up, right? That's what's going to happen in the economy. The prices are going to go up for those types of equity. Now, if the equity isn't kicking off free cash flows, and you're in this depression-like kind of scenario, and it's a business that doesn't do well in that environment, they're going to get murdered. And you're going to have further consolidation of enterprise, which means the prices are going to go higher, which means they've got to do more yield curve control to offset the delta between inflation and government issued debt. Like, buckle up.
It's a good way to put it. Buckle in. Let's move forward. Let's suppose we're living in the future. It's 2023. Let's say it's 2024. Let's say 24 months has passed, and now the Fed's engaging in yield curve control. Inflation's still 3, 4, 5, 6% at least. I think that's conservative. How is Bitcoin behaving in that environment?
It really depends on, I would argue right now you're in then they fight you phase. I really believe that like the FTX stuff, which I'm not going to get into, but the stuff that I'm reading online is insane.
Yep.
Right. It's insane. And people, if you want to dig into that, go read some of these. I read somebody's article. It was like 60 pages long. Detailing like all this FTX stuff. And like I walked away and I'm like, this is a very dark world right now. Some of these people in charge. If you get the then they join you phase because they recognize that Bitcoin is truly unstoppable and cannot be screwed with. I mean, anything's possible in that scenario. But if they continue to fight it hard Um, I just really, it's really difficult for me to kind of have any idea what that looks like. I think they're going to have a harder time fighting it than they realize. I think it's way stronger than anybody realizes. But I've got a, I've obviously got a pretty strong bias when I'm looking at Bitcoin. But I mean, look at the people withdrawing coins off the exchanges right now. It is crazy. And that's something you can't do in the gold market. I'm sorry, you just can't. And you definitely can't do it like instantly. But I mean, that's what's great about the being able to view into the blockchain. You can see this stuff, and you can see people are have gotten burnt, and it almost seems like a lot of people are starting to recognize like Bitcoin is different than FTX and crypto and like all this stuff. So if that continues to spread, like that mind virus continues to spread, I think you're going to get them to transition from then they fight you to then they join you because I think they're going to start to recognize what they're up against.
I couldn't agree more, and I think that transition will happen rapidly.
I think so too. I think so too.
The coins on the exchange is something that I've been squealing about on Twitter. I think it's fascinating. I think 35% of all the available Bitcoin for sale on exchanges has evaporated in the past 24 months. So the number of Bitcoin on exchanges actually peaked in March 2020 at a little bit over 3 million coins on exchanges. And since then, in the past 48 months, it's just you've watched 1 million coins fly off the exchanges. And obviously with the blockchain, we can see that they're moving to wallets who don't have a history of selling their Bitcoin. So I love to entertain all sorts of thoughts of who is accumulating that Bitcoin, but I think it's the smart money. I think it's
I think so.
Nation.
Something I would tell, and I would really encourage for people that are maybe somewhat new to the space, they're not software engineers, and they're participating in this space and they feel a little bit helpless. Like they own Bitcoin, but they wish they could do something. Let me tell you, there's a whole lot you can do. You can get your coins off the exchanges. And by doing that, what you're effectively doing is you are putting these exchanges that are operating in a legacy framework of a fractional reserve system, you are putting them on notice that if they're going to try to create paper Bitcoins, they're going to get caught and they're going to get slaughtered, right? And the only way for you to make that happen is you got to get your coins off the exchange. You got to take self-custody, and you got to do what this was designed to do, which is you own a piece of a money that is equity-based and not credit-based. When it's credit-based, the whole thing is a Ponzi. It really is. It is a Ponzi. And they're just going to print, they're going to do a couple keystrokes, and they're going to add more monetary units in there. But with Bitcoin, it's different. They cannot do that. But if you want to put them on notice, you got to withdraw your coins from the exchange. I can't say that strongly enough for people that are just like, oh, well, I got them on Coinbase. And it's just like, no, what are you doing?
You don't own the Bitcoin. I want to really co-sign that message. Not your keys, not your cheese. If you don't actually take self-custody of your Bitcoin, it's not your Bitcoin. On the coins exchanges, that's one thing that's really kind of puzzling me, that one chart of coins flying off exchanges. Something else that's really kind of piquing my interest is the hash rate. Hash is going parabolic in this bear market. I noticed it had a little bit of a correction today. I think it's down like 5 to 10%. But what are your thoughts on the hash rate right now?
So when people were thinking about hash rate, first and foremost, technology improves, and a hash today is very different than a hash 4 or 5 years ago. Something else that's important is that there's a time lag for miners to come online. You have to build them out. You have to have the infrastructure to plug them in. Because a lot of these large mining facilities, they might spend 12 months to 18 months just building out the infrastructure before they can even plug the thing in. So when you think of it in that framework that there's a lag, let's go back a year, 18 months when we had much higher Bitcoin prices, and it was followed by a China ban on mining. And what you had, a year to a year and a half ago were some of the fattest margins the space has ever seen in Bitcoin mining. So if you were a person working the numbers back then, you were saying, oh my God, if I buy this mining rig, I can do 100% annually based on like not even really that great energy prices. If you were getting energy for like 6 or 7 cents per kilowatt hour, you could probably plug the thing in and do nearly 100% annually on it. So people were putting in a lot of orders for rigs back then based on the numbers and the math that they were looking at. Well, there's this thing called the difficulty adjustment. And as more people try to extract more coins out of the network, more and more of them come online. It, as everybody knows, doesn't, you're not able to pull them out of the network any faster. Every 2 weeks, it makes that adjustment. So what you have happening right now is all those rigs that were ordered, you have technological advancement that's happened just through Moore's law and, moving from a 7 nanometer chip to a 5 nanometer chip. And before the 7, there was a 16 nanometer chip ASIC. And as you're going through that improvement, you're going through the difficulty adjustment, you're looking at prices from 12 months to 18 months ago. You've got ultra competition happening right now. And you have people that can't do it affordably because they broke the fundamental rule of mining. And the fundamental rule of mining is you have to have really cheap electricity, right? First and foremost. Like if you don't have a competitive moat and you're a miner around your electricity cost, like I'm sorry that you're going to come on days that are hard and you're going to have to turn rigs off because you're not going to be able to compete at certain points in the cycle. So yeah, those are my thoughts. I think you are going through a minor capitulation right now. And what's today's date? The 28th of November.
Looks like it just started today. So strap yourself in. Speaking about energy, something else that's really interesting about this whole geopolitical framework that we're watching is obviously the financial system's broken, but then in the geopolitics, you're watching the BRICS nations aggressively de-dollarize and even announce, hey, look, we're going to create our own reserve currency. So obviously for the listeners, that's Brazil, Russia, India, China, South Africa, and we've actually had a host of other countries apply to become a part of the BRICS nations. I think Saudi Arabia, they're massive in terms of their oil exporting capabilities. And then I think Egypt, Turkey, Argentina, all of these other countries are applying to become a part of the BRICS. How do you see the US and the West kind of responding to these BRICS nations, as they actually hold a large majority of the energy and the commodities that the West uses? And I think you on a recent podcast with, I think it might have been Jeff Booth, you were talking about how the West is paying for all of these real goods with fake paper that's backed by nothing. What's your thoughts on that whole dynamic we're watching unfold right now?
The interesting thing about all the BRICS nations and the ones that are wanting to be a part of that is they're net producers.
Yeah.
Right. It's that simple. They are net producers. They are extracting literally molecules out of the ground, and then they're selling them on the global stage to net consumers, to other net producers. It depends on what the product is that they're extracting, the raw material that they're extracting. But let's just generically do kind of a hand wave, and they're net producers. They're selling to net consumers. The net consumers want to pay with paper promises that are being debased at a breakneck pace with a credit market that's completely jacked. And so they know, if the credit market's jacked, and the supply chains are jacked, that inflation is wrong, or it's going to be persistent relative to the yields that they're providing in their treasury markets. That negative spread between inflation, because you got broken supply chains, and the yields in their treasury market, is why they know they're going to debase the currency further, and why they don't want to accept that currency as payment, is because they know they have to debase it. It's just math. It is mathematics, as Greg Foss would say. So, so they've basically come out and said, we'll accept payment in our currency, gold, or Bitcoin. Wonder why? It's because they don't want to receive a, for lack of a better term, like a Chuck E. Cheese token for the real work that they're doing, their proof of work of extracting these raw materials out of the ground and whatever else that they're making and exporting in excess. So, like, how do I look at the BRICS initiative? Well, I think the challenge for them is they're never going to get Western nation states sorry, my dog's over here, one pet. They're never going to trust that. Right. And I think they know that they're never going to trust that. It's almost laughable for a Western nation to look like, well, we're not going to pay you in your currency. That's never going to happen. And so that's their challenge, that I don't know that that's going to get resolved. Now, between them, they're going to have to sort that out. Now, whether they trust each other, I think is a whole nother thing. And so that's where I think Bitcoin just kind of steps into this dichotomy that's happening in the world between net producers and net consumers. And it just solves it. Yep. It's saying, listen, none of y'all have to trust each other at all. In fact, you can continue to hate each other. You can still do business with a unit, with a monetary unit that you both can trust, because it doesn't require trust, right? That's why I'm so bullish on Bitcoin. And I'm looking at this dynamic that's happening on a global scale and on an individual. I mean, you're seeing it literally the whole way down the chain, right? Individuals don't trust each other. Nation states don't trust each other. And you got this thing that's just, just pumping out block after block. And it's like, you don't have to trust anybody. You can just give them this public address and send it there. And, it'll clear faster than anything on the planet, better than Fed wire.
It's a beautiful thing. It literally is the asset that solves all of the problems the world's facing. It's just, how long is it going to take for everyone else to figure it out? That's the $1 trillion question, I suppose. Preston, I've had you for well over an hour now, my friend. I want to begin maybe wrapping this one up, but before we do, I know you're a big reader. I know you're a little bit of a bookworm. How many do you think you put away a year?
The podcasts are eating into the numbers that I used to pump out. There's just so much good podcast content out there. I used to try to shoot for 50 a year, between 40 and 50 a year. I'd say now I'm probably down to like 25 or 30 a year. I know that's sad, but that's where I am. But did you say you wanted a book recommendation?
I would love your top three if you have any top of mind.
Okay, so I'll give you a couple that I think are just books that I normally don't recommend, or maybe haven't recommended for a long time. I like to try to mix it up, because if I give the same book recommendations, people are just like, oh, okay, the same thing. There's one that I talked about. I think I talked about this with Robert Breedlove a little bit. The name of the book is Consciousness and the Brain. And for me, this was such an important book to just understand how our brain functions and to help me understand cognitive biases. And so another book that I would also recommend, and I know this one's recommended a lot, it's called Influence by Robert Cialdini. And I would read that book first. If you're going to read these two books, I would read the Influence book first. I think it does such a really good job to just help you recognize that a lot of the times we think we are just conscious about every decision we make. I think both of these books would really help you realize that you're conscious a whole lot less than you realize, and that you're being influenced all day long by things that you would never guess are influencing you. And so I think that's really helpful when you're talking about financial markets, investing, just challenging the way you think about things, your critical thinking in general. A book that I think is really pertinent, a third book that I would say that I think is really pertinent to right now from a macroeconomic standpoint and what we're what I think we're about to go through here in the coming 3 years. There's a book called This Time is Different. And I think its subtitle is 8 Centuries of Financial Folly. And this is a phenomenal, phenomenal book where people, what we're about to go through, I would argue nobody has ever experienced. Maybe in some other countries, people listening to this have maybe gone through what we're about to experience on a global scale. But this book does a great job of profiling these currency collapses and these big, giant credit events. And I mean, it just provides example after example after example throughout the book. I would say it's like a 400 page book that is really, really an interesting read, very interesting read.
I love it. Interesting recommendations. And I'd have to point the listener back to that podcast you did with Robert. I believe that was on the What Is Money show that you did, talking about the brain.
Yeah.
And I bought that book after that podcast, but you're going to be disappointed in me. I still haven't got to it. I have a long list of books.
There's so many books out there. I know. I listen to a show and I'll write down 3 books and I'll order them and then they sit or whatever. You're just trying to get your hands on all this stuff. But it's a very good book. That is a really good book. Consciousness in the Brain.
I'm looking forward to putting that one away. Maybe I got 2 more rapid fire questions for you. You've built an enormous business. Obviously, the Investors Podcast Network is it the largest financial podcast media platform there is?
I would guess it's not, but I have no idea.
In podcasts?
I have no idea. I have no idea.
Okay, well, anyway, any advice that you could maybe give anyone listening in who is kind of thinking about maybe starting a business in the future, or maybe is running a business right now? What's the key pieces of advice that you would give someone like that?
For us, this was just a huge accident. Like, we were just doing this because it was fun. And, especially the podcast. I mean, we did it for years and there really wasn't even advertising in the space like when we started. And so we were literally just doing this because we thought it would be fun. We thought it would be neat to talk to other people. And then it just kind of turned into a business. So the thing, I guess the guidance that I would give people is if you're trying to build a business and you're an entrepreneur and you're working on something that you just truly don't love, and it's not something that you would work on for free, it's probably going to be a difficult, it's not impossible. It's just harder because it'll start to feel like work. But for me, like, this job has never felt like work. Like, every interview, every person I get to talk to, like, I would literally do this for free simply because I love it. Like, I just love talking about this stuff. And I think it's because I enjoy trying to cover complex things. And there's nothing more complex than like financial markets. So that would be my advice. Yeah, you have to do something that you truly love, and when you do, I think it's kind of like business or entrepreneurship will kind of find a way if you're truly working on something that you love to do.
I think that's brilliant advice. The listeners will probably take a lot from that. Preston, I've had you for a long time tonight, my friend. Is there anything you think that we haven't covered in today's rip that maybe you want to just give a little closing remarks there?
Yeah, I would tell people that you have to match your position size with the knowledge and intelligence of what it is that you're buying. Whether that's stocks, Bitcoin, it doesn't matter what it is. If a person would go in and let's say they buy stock in General Electric and it's 20% of their portfolio, which is a massive position size. If the person hasn't read every 10K, every 10Q, know exactly the strategic direction of where the company's going, what their assets are, what the liabilities are, like all of those things, they're never going to be able to match the position size of 20% in their portfolio. Because if the price goes down and they were wrong for 3 days because the price went down 3 days in a row, they're going to second guess themselves. And they're going to say, all right, clearly I was just wrong. And then they sell lower than the price that they bought it. So when we're talking about Bitcoin, what you'll find is people will read a little bit about it and they see the asymmetry. They get super excited about it. Then they go out and they buy 20% of their portfolio into Bitcoin, only for the price to drop 50%. And they can't match that position size with the intellectual rigor that they've put into owning it. They only know a couple talking points, right? So that would be my closing comment to people, especially right now, who are maybe down. Maybe they got caught up in the euphoria. They bought at a higher price than where we're at right now. They've ridden it out mostly because of sunk cost bias and not because of intellectual rigor. And I would tell you that although you're down and maybe that the real reason that you're holding is because of sunk cost bias, there's a whole lot of reasons to keep on holding. And go do the homework. Go read as many books as you can on this. Go listen to podcasts. Put in the proof of work, intellectual proof of work, to understand what it is you own. And I think when people do that, they'll be able to match their position size of what it is that they own. And I know for myself personally, my comfort level and how much my position size has gotten to levels that I would have never expected. And maybe that's a fool's errand. Maybe I'm wrong. But I can tell you that I sleep very well at night. And it's a testament to the amount of hard work and rigor that I've put into trying to understand it more so than anything else.
I think that's just the biggest misunderstanding surrounding Bitcoin. People just haven't quite kicked that tire enough. Preston, is there anything else that you wanted to leave us with today? Where can I send the listeners? Where can they get in contact with you? And is Twitter the best place?
Yeah, Twitter is definitely the best place. Luke, appreciate you having me on. Love chatting with you. Love your writing and your work. But yeah, people can hit me up on Twitter. The podcast is called We Study Billionaires. The Bitcoin show that I do comes out every Wednesday. And thanks for having me on.
No, thank you so much for coming on. It was an absolute pleasure. Thank you for the kind words, and keep doing what you're doing. You have obviously one of the best podcasts in the space, and I think it provides a lot of value to a lot of people. So thank you so much, Preston. It was an absolute honor.
Thank you. Thank you for having me.
So that's the end of our discussion with Preston Pysh. Let us know down in the comments what you thought of it. Let us know in the comments who you want us to interview next. We already have interviews coming up with CK and Jeff Booth, but if there's anyone else you want us to interview, let us know down in the comments below. If you liked the video, you got any sort of value from it, feel free to slap a like on the video and maybe share it with a friend who you think might need to get a little bit of orange pilling from Preston. I think the takeaway from this interview is get your coins off the exchange. I really like that Preston hammered that point home. I think a takeaway from today's episode is if you own Bitcoin on an exchange, it's not your Bitcoin and you need to get that Bitcoin off the exchanges, okay? If you need help with that, again, we have guides on our website. We have a bunch of free education. If you're still too scared to take custody of your own Bitcoin, again, we have that Coinbeast Connect service where we can connect you with a Bitcoin Pro who will walk you through every step of that process on a video call. Guys, that's all we have tuned for you. Again, subscribe to the channel so you're notified when new videos drop. We will also be posting a lot of shorter form content over on our second YouTube channel. That one is going to be called Coinbeast Clips. This one is just the Coinbeast YouTube channel. That's the name of it for now. Without further ado, really hope you enjoyed that first interview here on the Coinbeast channel. We'll see you guys in the next video.